Hey guys, Akil here. Welcome back to another episode of the Trading Coach Podcast. Got a special video version for you today. So if you're watching on Spotify, you should be able to see my handsome face. If you're watching on somewhere that doesn't provide video and you want to see me for some reason, that sounded weird, head over to YouTube or Spotify and you can do so. Today, we are going to talk about micro investing. I'm going to explain to you guys what exactly it is and answer the question of, is it worth it? So the subject for today's podcast came from a comment that I got from someone that was listening to one of the Bitcoin podcasts, right? I put out 2 Bitcoin podcasts this year. The latest one was on the Bitcoin halving and halving, can never say that right, and what it means from an investor's perspective. But there was one earlier in the year as well that I did on the Bitcoin ETF, where I technically didn't make a call on Bitcoin because this is not financial advice. But we spoke about what I thought the ramifications of the Bitcoin ETF would be. And since that podcast came out, Bitcoin has been up 40+%. So you're welcome. But in that podcast, I went into explaining what an ETF is and how I think it's a good instrument for beginning investors. And that's one of the reasons I thought Bitcoin would blow up, because you're now taking, right, spot Bitcoin is very risky. And very confusing as well. To put something in an ETF format makes it a lot simpler to understand and makes it gives it a little bit more safety as well. And investors, we like safety. And the trader was asking questions. Hey, what are some other aspects of trading that I can get into as a beginner? And they asked about micro investing. And I thought it was a pretty good topic because micro investing there are some pros and some cons, let's say. So I guess to back things off a little bit, what exactly is micro investing? Well, micro investing is simply investing in a percentage of a share, right? So like with a stock, if I want to buy Skechers stock and Skechers stock is going for $70, I need $70 to purchase one share. Well, if you don't have $70 to spend on a share, right, and you still want to have kind of exposure to the market, what micro investing does, it allows you to get access to a portion of that share. So you may put in $10 and then 6 other people may put in $10 and you can have I don't know what that would be, 7% of a Skechers share, right? So it's not anything that you're necessarily going to make a lot of money off of, but it does give you exposure to the market. And this was a trend that we've seen really pick up over the last probably 20 years. When I first started investing, the minimums for investing were really, really, really high. In fact, I had a hard time having a lot of exposure to the market because there were no options to buy micro shares. So with a limited amount of capital and not a great amount of capital as far as investing goes, I had to be very particular with what I bought, how much I bought, and when I was in and out of it due to opportunity cost of other investments. And stuff like that scares a lot of traders away, right? If you're coming into the market and you're like, hey, I want to be an investor, and I'm like, well, yeah, you just need $10,000 to get started or it's not worth it. You're probably like, I don't know about that, Akil. I just don't have $10,000 laying around, and you get discouraged and you never kind of go into the market. You never gain experience. You never learn about it. And that's going to negatively affect your investment future. And more importantly, the next generation's investment future as well, because now that you don't have exposure to it, you don't have experience in it, you're never going to teach it to your friends. You're never going to teach it to your family. And then your kids won't grow up knowing. And then it just continues this path of like, I don't want to say the consensus, but like the idea that money is evil, investing is evil and scary, and it's a scam and all that fun stuff. And that's something that is completely false. But because we don't know any better, it's been kind of hard to shift the paradigm on that. So micro investing from a positive perspective is this: it allows you to get access to the market. It allows you to have why do I want to say stake in the game? It's not stake in the game, but some chips in the game, right? You are a partial owner. And whenever you have experience in the financial market, you learn because you pay more attention to it, right? The other day, my wife bought her first individual stock without my help, or with limited help by myself. I kind of pushed her, said, hey, you should do it. But she did it on her own. I didn't give her any financial advice because, once again, I do not give financial advice, but she bought Skechers, and she knows nothing about the stock market. She knows nothing about investing. She leaves it up to me. But ever since that moment, now she's been paying attention a little bit more to Skechers. She's like, hey, this ad came out, and hey, they did this new partnership with Snoop Dogg, or hey, this, hey, that. Oh, they got this new NBA sneaker coming out. She's paying more attention, and she's becoming more knowledgeable, and she's starting to put the pieces together of like, hey, when I hear this or read about that or see this, that should equal blank, blank, blank for the stock. And it's got her thinking like an investor, which is positive because eventually that will carry over to different stocks, and in other aspects of life as well. So there's a positive of having kind of, again, stake in the game, meat in the game, a chip in the game. Someone correct me on what I'm supposed to be saying down below. Please, this is bothering me. But this is the brilliance of a live podcast. There's a positive doing that. And from another positive, kind of before we get into the negatives of it, or the warnings, I guess you should say, is that from a teaching perspective, this is not just good for novice investors, but this is good for teaching your children, right? My dad did an awesome job of teaching me how to invest, and that's one of the reasons I am where I am today, right? If I never would have gotten to the stock market because it was the next step in my investment journey, I never would have became a trader, never would have had this podcast, I never would have knocked down the water bottle, and all this stuff would never have happened, wouldn't be living my perfect life. So I want to do the same for my kids. And my kids aren't at that level quite yet. They're still at the level where they're understanding money. The next step for my youngest one is investing. So when we get to the point where he starts getting allowance, right? I don't want him hearing that. I don't think he knows what it is yet. Once he finds out where it's over for us. When he gets to the point where he starts getting allowance, right, we're going to put some rules. We already have rules for like birthday money, Christmas money, where you can keep a certain amount, another certain amount has to go into banks. So we're teaching them about savings, and not that you get a lot of interest, but interest in the market, interest in a bank account and how that will grow. And by the time he's 21 or whatever like that, he'll have a nest egg and whatever. He can start his business or whatever he wants to do, go spend it at the racetrack. It's his money. Do whatever he wants with it. But the next step is investing, is now saying, okay, we're going to put some of this money in the savings account. You're going to put some of this money in your piggy bank where you can spend on whatever you want to spend or save it there, but you're spending money. But then we're also going to take a portion of that and we're going to put it into investing. He's going to be like, well, what's investing? Blah, 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 blah. And then I get to explain, right? But hopefully with that, and there are all these cool apps for kids, he'll be able to track investments and kind of see like, oh, my money is making money. When I invest in this, over time, because he's playing the long game, this is something that could be beneficial. This is another stream of income. And then boom, he'll have that kind of, that mindset set. Now, so I do think kind of micro investing is great for that, especially for a newer person who wants to get exposure. Now, if you're looking at micro investing as a way to make a lot of profit, that's a different story. And I'm not going to get into the different apps and businesses that are out there. You could do your own research on that. But the main thing that I would warn you about is be aware of fees. Obviously, you want to look at the different packages, what they have access to as far as ETFs, individual stocks, indices, blah, 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 cryptocurrencies, foreign exchange currencies, right? If you have a lot of different options, it's usually a better thing versus like, hey, I have this one option, you have to do this. But you want to pay attention to return. Obviously, you want to see what your return on investment is. What are you getting for the money that you're giving them? But you also want to pay attention to fees. And this is what a lot of people don't pay attention to. And the thing with micro investing, I guess the cool part of it is that a lot of these apps and programs have this thing where they round up. So you can link it to your bank account, you can link it to your credit card, and whenever you make a purchase, it rounds up to the nearest dollar, and then that amount is invested into whatever you're investing in, right? So like, for example, if you go to a store and you spend $10.70, right? That 30 cents to make it to $11 will be taken out of your card or your bank account, and that'll be put into your investment. And the cool thing about that is that it does it automatically. And if you ever read the book called The Automatic Millionaire, you'll realize that one of the reasons people struggle to invest or save is because we just get lazy and forget, right? It's easy to tell ourselves like, hey, I'm gonna, at the end of every day, I'm gonna put $1 in my piggy bank or walk to the bank and put $5 in there and save it. And then what happens at the end of each day, you're like, I'll do it tomorrow. I'll do it tomorrow. I'll do it tomorrow. And you get to the end of the month and you're like, nah, I'd rather spend this on XYZ. I'll just, I'll do double next month, right? Whatever excuse we make. So a key component in saving is to have it do it automatically, because it's out of sight, out of mind, right? You don't see this money. This money that you're spending never comes in, or you're getting never comes in to touch your hands. It goes out automatically, and then you're like, okay, yeah, whatever, it did it, and you're more likely to follow through. So that is a very popular feature. I do enjoy features like that. I do that with charity. We have a thing where it rounds up and gives money to different charities, blah, blah. But I do think it's a great feature. It makes balancing the books very easy at the end of the month and end of the year as well. But here's what you have to understand, or have to do your mathematications on. So these banks, these apps, whatever you want to call them, programs, like anything else in the world, they charge a fee, right? Nothing is free. You got to pay money. If you're investing, if you're trading, we get spreads, commissions, right? This is common knowledge across the board. However, although a fee isn't much in the Forex market, where I'm paying a 2-pip spread to take a trade, or a fee isn't too much if I'm buying an individual stock and I got to buy a couple, or spend a couple dollars to get in and spend a couple dollars to get out, right? Not a big deal, because I'm spending big money on these stocks. Again, if we're buying one share of Skechers, I'm spending $70, and I'm probably not buying just one share, so it's not that big of a deal. But remember, when we're purchasing or making purchases with micro investments, what we're putting into the market is only a small percentage. Remember, if I spend $10.70, 30 cents is going into that investment. So if I'm using a tool that charges me a simple price of $3 a month, right? Doesn't sound much at all. I need to think about, how much am I actually putting into the market, right? Because if I'm making 10 transactions a month, and those 10 transactions are being rounded up by 30 cents, $3 I put in the market, which seems like a lot. But wait a minute, my fee was $3. So how much did I actually put in? 0, right? If I made 20 transactions, I put $6 in. Well, my fee was $3. So that fee was 50% of my investment. So wait a minute, that's not as good of a deal as you thought. And that's something to consider. So you need to weigh the pros and the cons of it. Again, I like the idea of micro investing as a way to get exposure, but as a way to make profit, you gotta be careful, or you gotta spend a whole bunch every month. I think the better alternative is this, right? Dollar cost averaging is typically what I tell beginner investors to start with. This is where you find an index. Like take the S&P, for example, because it won't fail, and just every, let's say, month, you commit to putting blank amount in, right? Take whatever percentage out of your paycheck or whatever and put it into the market. Don't try to time it. Just put it in the first of each month, every month, right? Now, again, this is not automatic, right? So you have to kind of be disciplined in doing it. But what you're going to do is you're going to save a lot of money. So let's take the same example, right? Let's say that I'm getting charged a $3 fee to enter a transaction, and I'm doing all these smaller transactions, and those transaction costs on the micro investing took up 50% of my blah, 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 blah. If I'm simply saving my money throughout the month, if I'm putting $1 away a day for whatever like that, I have $30. Now I can invest that $30, and I'm only getting a single transaction fee, right? So you're going to get more bang for your buck that way. So I think if you had to decide between the two, dollar cost averaging, just making an investment, whether it's dollar cost averaging, whether it's just, you're doing it in an individual stock or whatever your thing is, making a consistent habit of doing it once a month or bi-weekly, I think that's a better choice, because you're going to get more bang for your buck. But if you're brand new and you just want some exposure, or you're a parent and you're trying to set up a tool for your kids, not to make money, but just for them to learn and kind of get off on the right track, then I do think micro investing could be a positive place. Hope you guys enjoyed the podcast. Do me a favor, lend me your opinion. There's going to be a Q&A asking, have you ever done micro investing, right? And then there's going to be a question there that says, hey, What do you think about it? Is it something that's beneficial? Is it something that's not worth it? I would love to hear your opinion on it. That way I can read it and I can spread the word with our Trading Coach podcast community. So as always, like, share, subscribe, review, rate, all the things you need to do to support the show. And until next time, plan your trade, trade your plan. Take care.